Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Monday, April the 7th, 2008. I apologize for not being able to post the news on Thursday or Friday of last week. Unfortunately, the software for my video cam crashed, went kaput. So we tried to fix it, was not able to. I experimented with a couple other video capture programs. The quality was not there, so I'm back to the original program. Right now we're recording on a wing and a prayer, but hopefully everything will go smooth enough that I will be able to post today. We will get down to business. The headlines out of Switzerland this morning said dollar dropped lower after weaker than expected U.S. jobs data. The dollar fell on Friday after a report showed the U.S. economy shed jobs for the third straight month, confirming fears that the country may already be in a recession. The euro-yen posted gains against the dollar after the government said U.S. employers cut 80,000 jobs in March, more than expected and the biggest monthly fall in 5 years. The dollar had recovered most of its earlier losses by late afternoon. However, as traders said, the data did not come in as a big surprise to the market that has long expected Federal Reserve to cut interest rates again late this month. On Friday, the euro-dollar was up at 157.28 after climbing as high as 157.74 after the jobs data, but it ran into aggressive selling at that level. The dollar-yen was down at 101.46 and the dollar Swissy fell to 100.62. Analysts are saying some traders were looking to trim bets in favor of the euro ahead of the European Central Bank's meeting on Thursday. The ECB is expected to hold rates at 4%, but a string of recent weak Eurozone data has traders waiting to see if President Jean-Claude Trichet softens his stance on inflation, which could signal a rate cut later this year. Steady Eurozone rates at a time when the Fed has slashed U.S. benchmark rates from 5.25% to 2.25% in recent months have boosted the euro's appeal over the dollar. Analysts are also saying the euro will probably settle into a 155 to 158 range this week, though they said the dollar remained at risk should the U.S. economic data worsen or another Wall Street bank fall prey to massive mortgage-related losses. The deteriorating employment situation in the United States also remains a concern, particularly a jobless rate that the government data on Friday showed jumped to 5.1% from 4.8%. The Aussie dollar was up at 92.28 despite an unexpected dip in the Australian February retail sales data. The dollar loonie was up at 100.83 after an early Canadian government report showed that Canadian unemployment rate rose more than expected, fueling expectation for rate cuts from the Bank of Canada. In the Asian session, the U.S. dollar made some gains. The dollar gained strength in the Asian session, shrugging off the recession-indicating payroll figures on Friday. Risk appetite appears to be firming as judged by the carry trade. The euro-dollar started the Asian session at 157.40, but failed to break resistance and promptly sold off, reaching 156.51. The Aussie yen had strong momentum throughout the session, peaking at 94.52. There is growing evidence that much of the pessimism surrounding the U.S. economy has already been priced into the dollar. Friday's payroll figures suggested only a mild recession so far, while housing figures and the ISM have shown signs of stabilization. In addition, interest rates differentials seem to have peaked. However, the most striking evidence was the ability of the dollar to quickly reverse after Friday's figures and continue to recover. Over the weekend, European finance ministers meant to discuss their agenda for the G7 meeting in Washington next week. While nothing official has been released, newswires have reported that the primary focus was coordinated action on easing credit markets and not foreign exchange markets. We still expect the market will be buzzing with speculation, but doubt that any forex intervention will be on the agenda, since the U.S. government must understand that a weaker currency will provide the economy with timely support. Today we have a very light economic calendar, which will keep trading subdued. Today's German industrial production data is likely to reveal some moderation, although the decline will be relative since it will be declining from a very strong level. Recent figures have pointed to a sector that has been somewhat resilient to a slower global demand and a strong euro. Even though we have very light economic data today, there is one thing that we will be keeping a close eye on, and that is the GCC meeting, which will be taking place all day today. This is where financial officials and central bank governors from 6-member Gulf Cooperation Council, which is the GCC, will meet today to discuss the timetable for monetary union and other matters. There may be press conferences throughout today and comments from their officials. Comments from the GCC will be monitored very closely, as speculation over a possible move to break currency links with the U.S. dollar has been important to the U.S. dollar sentiment. So definitely we will be keeping an eye on those reports or any comments that are coming from that meeting today. That concludes our news for today. We hope you're finding this beneficial and hope you'll be able to join us for our next broadcast tomorrow. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. Also, there is a link to our Yahoo forum, which is also called Succeed in Forex. We hope you'll visit us there soon. Happy pipping to you until we meet again.